Hey everybody, welcome to today's game plan. It is Wednesday, 9 a.m. Eastern time, and we are going to get into the action today. So again, welcome to the game plan every Wednesday, 9 a.m. And we're going to get into some hardcore data here. We got to discuss first and foremost the CPI data. It just hit 30 minutes ago. The CPI data came in month over month, slightly better than expected at 0.2%. All right, so we're going to get right into some numbers here. I want to show you guys this because I do think it's worth keeping an eye on. So U.S. consumer prices rose at a modest 0.2% in June. Expectations were for 0.3%. So we did see a beat on the month-over-month numbers. In addition, the yearly inflation rate dropped to 3% from 4% the prior month. And again, that was key here because this is again showing that inflation is dropping. Now, you'd think this is all roses, right? Everything is good. But again, just like most things, we have to delve underneath the hood to see. And this is the headline kind of that caught my eye. Now, listen, stock market is rallying. We've seen gold popping up. We're seeing even Bitcoin inching up a little bit, although we'll get to that. The price action continues to be very, very muted in Bitcoin. But this is what got me here. Here it says, the decline is not quite as fast as it seems, however. Groceries and gas prices have retreated this year and accounted for a large part of the slowdown. For one thing, okay, and some huge monthly increases in consumer prices in 2022 have dropped out of the yearly calculation. So again, when you go back year over year, you have some big calculation in pops that have dropped off because, again, they had their biggest pop in inflation about a year plus ago. And so they've fallen off the calculation, or essentially it's not that big pop anymore. So the question here is this number as good as it seems? And again, I would warrant a little bit of caution here. To me, again, this is as this clearly says, you have gas prices and grocery prices that maybe are not giving us the true picture, and some things are falling off. But having said that, prices on the markets are up on this news. All right. So we are seeing the dollar decline. The dollar has now had a 1, 2, 3, 4, 5 candle decline on the daily chart. We are coming towards support, though. And again, this is important because this is directly relatable to how the stock market performs, right? We know that a weak dollar right now is a positive for risk assets. And notice this, 5 bars down, generally we've been seeing the stock market inching gains. We saw gains yesterday in the stock market. Today, pre-market going into the open, we're also seeing gains. But again, keep in mind, this could tell us the fact that we're coming into this pivot low from April. This could tell us that we're going to see some sort of bounce in the dollar, which could bring stock prices in just a little bit. All right, I want to go into a couple other things. We got to take a look at the 10-year yield here, guys. The 10-year yield obviously is making a move. Notice this, and this is Technicals 101. Look at the pivot high right here that we hit a few days ago on the 10-year, right at that same high pivot at 4.08 or 09%. Look at the pullback, and we're seeing continued downside here. So lower yields and a weaker dollar is in general a recipe for the stock market to go up. All right. So again, risk on. The lower yields, basically, that helps with people making the decision. Do I want to put my money in stocks? Do I want to put it in crypto? Or do I want to put it in bonds and get X amount of interest? Well, the lower interest bonds are offering, the more likely people will say, okay, I want to be in the stock market, even with the lofty valuations that we have. Now, if we look at this chart, where's the likely pullback on this chart? And the answer is to the scene of the crime right here. Okay. Now, interestingly enough, this trend line, see this downsloping trend line? This is very similar to what we've seen in gold in terms of its pullback off of its all-time high, right? It pierced that all-time high a few months ago, and it's pulled back to this level. All right, I want to show you that gold chart real quick. So if we look at gold here, okay, here's a downsloping trend line, pulled back, broke out, and then look what it did. It retraced to the scene of the crime. What has gold done since then? It has started to move to the upside. So again, we're seeing gold beginning to move up here on the charts. And again, that again signals that support level, a retrace to what I call the scene of the crime. That again is a bounce off of it. And gold again is up today. Why is gold up? The dollar's down, right? I mean, that's the basics of it. So again, in terms of the gold chart, where are we looking for this? So I've called, ever since we were at this high, I've said to people, and I've said it in this broadcast. In fact, if you go back 2, 3, 4 weeks, every single week we talk about gold. And I kept on saying, guys, it should pull back to this trend line. Well, it finally did. And then I said, okay, now you're looking at upside potential. Now you're looking at maybe a move and a breakout above the all-time highs, which if we put a trend line in here, we can clearly see, look at this. That's your all-time high level. So the way this works, education, here we go, education 101 in investing. You have a high pivot and you pull back. When you hit the high pivot again, probabilities, that's known as a double top, you get a big pullback. Big pullbacks off double tops. When you hit a triple top, it's a small pullback, and usually you'll come up and break out at that point. So again, the idea here is that we've gotten the shallow pullback in gold. My guess is this is the beginning of a bigger move up in gold that we should take out by year end, this all-time high. And actually, I wouldn't be surprised to see 21, 22, even 2,300 by year end on gold. Okay, so again, couple little tidbits there that I want you guys keeping a close eye on. All right, let's flip over to silver. Then we're going to get into some stocks. We have some stock movers and some levels on the S&P 500. All right, so we are seeing silver moving up here. Now, silver's a little trickier of a commodity to gauge, and I want to show you this, guys. So when we had a pullback on silver, it was a much more dramatic pullback. Look at how you have this line. This is almost the inverse of the gold chart or the yield chart that we were just looking at. You have an upsloping pivot to pivot, and we broke below it. So what does this tell us? It tells us that if you get back up to this $24 level, $24.35 to $24.40 on silver, this is probably a level that you're going to pull back off of. All right, now you might say, well, how does that mesh with what gold is showing us, right? I mean, if gold is showing us that it could be headed higher, why would silver be going up and then pulling back? And the answer is twofold. Number one, gold could go up as well with silver on this move, and then gold could just have a small pullback, like a 3-day small minor pullback. Silver could have a much bigger pullback. The other thing to always remember on silver is that it's an industrial metal. So as long as this soft landing narrative is in play, silver is going to outperform gold to the upside. All right, you're going to see bigger moves, and you can see that today, right? I mean, today silver's having a move of 2.35%. Gold is only up right now 0.6%. Right. So there's obviously a huge difference there. Silver is outperforming gold. So as long as the soft landing narrative, the fact that investors are saying, okay, the Fed can totally make us into this perfect landing where everyone sings kumbaya and everything goes great, well, then silver is going to outperform. But if you get into a point where we start to see interest rates continuing to climb, all right, or at least staying stationary, and jobs continue to decline, which, remember, we saw the non-farm payrolls report last Friday that signaled a slowdown in the job market. That if that continues and we don't get this soft landing, silver will underperform gold because, again, it is an industrial metal. It is used in the building of things, in batteries, etc. It's a very, very good conductive metal. Okay. So that gives you an idea about what we're seeing on silver. I do want to go to the SPX here. Take a look at the SPX. This is a trend line that I've talked to members at Verified Investing Alerts, which is at inthemoneystocks.com. And don't forget, guys, come and follow me also at verifiedinvesting.com, which I have my crypto service at. Plus, we are broadcasting on that station just like mine here. But this trend line, look at this trend line, okay? Look at how accurate this trend line has been. Every time we've hit it, we hit it here, pulled back, hit it here, pulled back, hit it here, had a big pullback, hit it here, had a small pullback. That's your upside target, right? So if we get back to this level, which is right around 4,500, right? 4,495, but it's an upsloping trend line. So within a few days, basically by next week, you'll be at 4,500. That is your level of resistance. All right. Now, again, is it possible to break above that level? The answer is yes, but it still has to be respected until we get through it. Now, if we do get through it, where is your next resistance level? And again, I will show you right here. Your next resistance level is right in this mix, right here, would be your next resistance following that at about 45.90. But right now, respect this 4,500 level until proven otherwise. All right, so that's where we have on that. Now let's go to the NASDAQ 100, guys. The NASDAQ 100, again, is dominated by 7. They call it the Magnificent 7 here. But you can see this downsloping channel. And notice how, again, pivot low, pivot low, pivot low, pivot low, pivot low. And then the pivot highs match perfectly. That's where we saw this little pullback. We saw this secondary pullback. What I'm watching for is this level right here, basically this right area here. So right around 371. Now pre-market, the QQQ is trading right in that area. If we flip over to the intraday, go to extended hours, look at this. We're trading at 371. We're right into that level. So that is a big level to watch today on the tech stocks. I want to see, does the NASDAQ 100 close, let's say, above 372? If it does, and we start to see a confirmed break above this channel, then you have to start looking at the next trend line or the next level of resistance. And I'm going to give it to you guys right now on the QQQ. There's a gap fill right here at 380, pretty much to the button here on the QQQ. And again, that would be from where we're currently trading, it would be another $8 higher from where we are pre-market, $7 give or take on the QQQ. So that would be your next resistance point. And then obviously you get towards those all-time highs, which take us all the way back to 2022, late 2021 and 2022. All right, now we got to get into crypto, guys, because again, and by the way, we'll flip back to some stocks. I have some key stocks I want to cover here. We still have some decent time, another 10 minutes on this broadcast at least. But this is a concern of mine, and I'm just going to be straight up with it. Today we got CPI data. All right, we've had positive news on Bitcoin in terms of ETFs, spot ETFs, multiple filings for ETFs. Yet, even on today's CPI number, what type of move are we getting out of Bitcoin? I mean, what, like, really? This is the little uptick we're getting today on the daily chart. Now, listen, this is still a bullish consolidation pattern. It's one of the longest bullish consolidation patterns I have seen in my career in crypto, as well as even in stocks. But it is still inside of the 30,000 to 31,000 range. So it still is slightly bullish, okay? But it continues to irk me. Why hasn't all this positivity, all this risk-on behavior why isn't it causing us to see a breakout on Bitcoin? Okay, now again, I think once this does, if this breaks out, you're going to get a big move. I have an upside target. First target's around 35,000. So you're talking another $4,000 up. That's over 10% up. But it has to do it. And we've had good news after good news after good news for Bitcoin specifically in terms of ETFs not being labeled a security by the SEC, all of these other things. I mean, MicroStrategy's bought a ton more Bitcoin, all of these positives, and we've still been stuck at the same level we were in April. So again, as a trader, as an investor, all you need to be focused on is the 31,000 level here. Let's see if we close above it, right above this area here. Or on the bearish case, do we close below this trend line here? If we close below, I'll show you where we're going to go. All right, we're going to go right here. This is going to be your target, basically 26,600, give or take. That's a classic trend line that is a no-brainer. So again, break here, we go here. If we move to the upside, then I think we head towards this area right here, right around 35,000. Your max upside, by the way, on Bitcoin would be this area. In fact, I can go back even further here. Bear with me as I draw this in. If we take this pivot high here, look at this beautiful pivot and trend line. Look at that. That would be that would kind of be your maximum upside that I could see in a short amount of time on Bitcoin, would be about this 45,000 level. You can see trend lines here. Touches these lines, and that's where we had a big breakdown. That could be a retrace to that level. Now, by the way, what's interesting about this 45,000 level, it's basically equidistant between this low and this high. So it would essentially, and again, I can do the fibs. I think it's pretty close to a 50% retrace. Let's see. Yeah, very close. So right there's your 50% retrace right here around 43,000. So you're essentially at a 50% retrace from your highs to your lows. So little things like that kind of warrant attention. But that's, again, contingent on us breaking through 31, going to 35, and then breaking through 35. All right, so it's kind of a long way away, but it is something worth keeping an eye on. Now, we have seen altcoins starting to make moves here. Altcoins like Matic had a breakout. Take a look at Matic here. Beautiful little breakout on this over the last couple days. It's been consolidating. Again, upside maximum would be about 83 cents, would take us back to this level right here. And then Solana has been a rock star. It continues to be one of my favorite cryptos that are not Ethereum and Bitcoin. And you could see here, look at the move. It's up from $14 to $22. That's a 50% move. And it's even trying to break here. If you look at the bigger picture, you had this up move, and then this is a channel, a bullish channel. That's your upside target, $24.40 on Solana. So again, Solana, by the way, you wouldn't be chasing Solana here. At least I don't. I don't chase anything. It's a great move, but it's obviously up 50%. You're not paying up 50%, especially for your reward of another $2. That's less than 10% on this trade. But what I would say is if it hits this line and pulls back and makes a bull flag or consolidation, that's the buying opportunity, right? Like a 50% retrace type thing. That would be an opportunity to go long on that chart. All right, I want to go into some tech stocks here. We got to look at Netflix, guys, because Netflix, again, has this beautiful trend line here that I'm going to be continuing to follow. And again, oops, I moved that trend line there just slightly. That's your trend line here. The reason I'm bringing this to your attention is because, as you can see, you start here and you hit it right there and you had a big pullback. You pierced it, had a pullback, hit it, had a small pullback. That's a resistance line. So you're looking at around $450 on Netflix. The reason why that's also good resistance right now is that it's also a gap window. It's the highest point since the gap down right there from that window there. Now, if you get through this 450.55 level, you're headed towards the gap fill right there. Another chart I'm keeping a close eye on, take a look at Meta, guys. Meta, again, is opening, or at least right now, it's trading a little bit above 300. But look at this level on Meta coming up. This is just above 300 at around 303 to 304. Look at this pivot high here through right here, right to here, and right through, right? So you're getting into a lot of resistance. I would say anything between 303 and 310 on Meta is epic resistance. Again, here's 308. There's another little pivot right there. That is going to be a huge level of resistance. And if you continue up, there's a gap fill from the big gap down going back to 323. So again, we'll have to see how that goes. Microsoft's another name. We'll touch on Apple real quickly here as we get towards the end of this stream. But Microsoft has a head and shoulder pattern here, shoulder, head, and shoulder. It, as of 2 days ago, triggered. But if it gets back above 334 on a closing basis, that would undo the head and shoulders. So be aware of that, again, you're watching for where this closes. Right now, pre-market, it is trading above that level, but we have to see where it closes. But you can very clearly see shoulder, head, and shoulder here. And again, here's your neckline. We have this breakdown here. Let me remove that so it doesn't confuse anyone. Here's your neckline. Here was your break. You stayed below it yesterday. Where does it close today? That, again, is going to be something I'm going to watch. If we continue down, target's going to be 316. A completion of the head and shoulders takes us to about 307. All right, quickly, let's look at Apple here. And then I'm going to go over my favorite trades just into the end here. Just a few little trades on the market that I'm going to throw out, some ideas to you guys. But here on Apple, I love this chart, guys. You had this breakout, which was an awesome breakout. Basically a measured move. This low to the line, from the line to this high, is essentially equidistant. Okay, so you have what we call a measured move there. You broke above the channel, but if you know the confirmation signal, which I teach in the Winning Trader series at Verified Investing, you know that you broke above and you never confirmed. It was not a confirmed breakout. And look at what happened. We came back in below the level, back inside of that channel. So that's something that's very, very important to look at. We do have earnings coming up in the next couple weeks. That's going to be basically starting tomorrow and Friday. We have earnings from banks. I think Delta reports earnings tomorrow as well. So that'll be interesting to watch. But again, that's coming up as well. Now, I want to go over just a couple trade ideas, guys. A couple trade ideas. I want to look at CCL. CCL is Carnival Cruise Line. Look at this trend line here. All right, amazing move to the upside. It's bubbling up against this 1980, 1975 level right here. That is a major trend line right here. It's starting to stall out. Short term, it's extremely extended. So again, that to me is a very, very interesting potential short for a swing trade. And then if you look at things like DAL, DAL, which has earnings tomorrow morning. You got to be careful into earnings, but this has had a rocket ship move, and it's getting very close to that $50 level, where again, to me, that's a lot of resistance. So again, on earnings, if it gaps up north of $50, I think that is a great shortable opportunity on the stock. Again, look at this line here, and I want to show you this, guys. Look at this level right here. And if we just drag that out, it's really around $51 or so, but pivot low, pivot high. And again, one push up gets us there. Look at the extended move. Take a look if you have time at the RSI. All of these things are signaling a pullback around that 50 to 51 level on a swing trade basis. So again, extended move for sure. All right, guys, that's all the time I have for today. I have to get going. I have to get ready for my trading room so we can make some good day trades off the back of this at inthemoneystocks.com. Make sure you follow the YouTube channel for verified investing. Lots of amazing content coming out on there on a daily basis. Lots of trade ideas, lots of analysis, lots of thought processes through trading and kind of education. So get involved there. You guys, thank you for coming out to this game plan, and I look forward to talking to you soon.